What's going on, traders? Hope everybody had a great trading week and is having a great weekend, relaxing with family and friends. I wanted to go over a analysis here of the S&P 500, the Spider ETF, and a little bit of a look ahead for the start of the week. And of course, before we get into any of that, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So with that out of the way, let's get into some charts, and let's start off with the economic calendar for the upcoming week. We do have a big week this week. Let's start to take a look here at the calendar. We do have a Fed Governor Jefferson speaking at 12:50. Okay, interesting time on Monday. And not too much on Tuesday, but Wednesday, October 11th, we've got PPI coming in at 8:30, so we want to pay attention to that. And then we do have Fed minutes from the September FOMC meeting at 2 p.m. And they don't stop. Thursday, October 12th, we've got 8:30 initial jobless claims and CPI. So we're going to be watching for that print, as of course it is a major market mover. So let's also be careful. We did see some volatility expansion, of course, great rally for the bulls on Friday after NFP numbers came out, pushing us up, of course, higher. And we had that volatility expansion, and especially considering we have CPI on Thursday and FOMC minutes on Wednesday, although minutes, has not been quite the market mover that it used to be. But we can see potential choppy and price contraction in our range over the first couple of days. So let's just be aware of that and be very careful, how we're trading and our sizing, and temper our expectations a little bit. But then Friday, the 13th, doesn't look like we have too much consumer sentiment at 10. Import price index at 8:30. Really not too much that I'm interested in that can move the market there. So definitely the big things we want to watch out for, of course, is going to be that initial jobless claims, CPI, Fed, FOMC minutes, and PPI to a little bit of a lesser extent. So, all right, with that out of the way, let's get into some charts here. And we'll start off just by looking at the price action only and the weekly candle here. And what can we take away? Well, nice hammer. This is an ideal situation here for the bulls, I would have to say. Overall, nice candle with strong selling pressure, strong buying pressure coming in after we tried to make a new low on the week. And unable to do that, and we pushed back up into last week's range, closing pretty much at the upper part of last week's range. Now, did we break out of last week's range? The high last week was for 32.30, we'll call it. But we did not close over the high of last week's range. So we'll be watching very closely that high there. Again, that number's for 32.30. It's actually 27. I'm just rounding up, whatever. But watch that zone. That's also, you can see right here, that's the October 15th. October, what am I saying? That is the August 15th high, right? So we'll be watching that very carefully. And, it's kind of course, I always go over, no one hits a level right to the number, right? So you could even say, 429.65, and even watching the low of the 14th, which is going to be 433. So anywhere kind of in that area, and I'll kind of draw a little zone here. This is going to be really what we're going to want to see the bulls be able to recapture for potential further upside from this, just this perspective, right? And we also want to keep an eye on the lows of the 21st as well. So we could even throw in a little level in that area around 435. So we'll also kind of take a look at that zone a little bit on the daily chart, because I do have at least somewhat of an idea of what may happen if, and that's a big if we start to recapture, certainly get some closes over that low from the 14th of August, right? That weekly low. So, but things are moving a little bit in the right direction for a bit of that retracement, right? And we will see first step, and that it's a little bit, could be a little bit higher. I'm going to call it that 435 area that I was just mentioning. That's going to be about a 25% retracement of the week of the 18th's downside move. Didn't actually quite tag it there perfectly, but we already talked about that level, and okay, there we go. So that's about 25%, right? And so, like I said, if we get over that, then we can start to talk about maybe that typical 50% retracement of the range. So let's see, and we'll look at the daily here where that also may end up putting us. And you can see, because we can see the gap actually that we have up above when we get into the daily. I can't see it here on the weekly. But you can see the failure to make the low. And let's see, as we were mentioning before in the other videos, really price can trade all the way back and retest this double inside bar here. And it's still technically on the daily chart, we could trade all the way up into 430, 443, and technically really we would just be creating a new weekly higher, lower high in the sequence, right? So although things look encouraging for a retracement, just have to keep a picture structurally. Bulls could make quite the move, and we still are in a weekly downtrend, and really it's it's not time to start taking the chickens to roost, right, so to speak, for the bulls. So I'm not 100% convinced, but that thesis of a bit of a retracement is starting to look a bit better, right? So that is encouraging. All right, so let's take a look at the daily chart now and see what we can take away from that perspective, just the candles and price action here. Very nicely, we had a few inside days. We had a potential bull flag, right? Kind of trying bear flag, excuse me, trying to form here before this candle. We're talking about that as well, and we were looking. We were looking at this potential pattern like that, for a move, but bulls said not so fast. We pretty much had hung out in the top of this area here, and we filled this small little gap, tried to break lower, unable to, and we kind of just basically found a bid right at the May 15th, what is that, the 15th or 16th, 19th, excuse me, highs here, and basically did 1, 2, 3, 4. Basically did a quad bottom, right? I don't know if that's a thing, but and have found a bid and pushed up higher. Now it is nice. We did retrace, obviously, and repaired a little bit of the damage done by the bears. But again, really, what's going on from the highs? We still are not. We still have nothing structurally really repaired, right? It's all lower highs, and this hasn't even taken out this the high of the 29th yet. So let's see if they can start getting over some of those areas that we were mentioning before, and if we can start trading over again that 435, I think personally I think we're going to be heading for the gap, and that lines us up with that 435. Now again, I don't know if we're going to be able to get into it. Maybe we can. Certainly if we start to trade into there with some momentum, I could see price coming back into close to that 440, maybe 438.50 area, fill that gap, and I personally think that from there we may find some headwinds. So of course it doesn't move in a straight path, so maybe we do this, maybe we come down a little bit. Now we have had some news on Saturday, unfortunately, about conflicts in Israel and in Gaza and Palestine and all that. So we're going to have to see how the market does react to that when futures open at 6:30 on Sunday, and that also might change the where we stand right now. If we gap down, I really don't know how the markets are going to react, if at all. But as things stand right now, it might not be a straight path, as I mentioned. But as long as we can hold here 50% of this daily candle, and let's just go back really quickly to the week. Okay, yeah, it's not. Let's do it here on the daily. As long as we can hold the 50% move of the daily candle, we can have that probably be the last two, the highs from the last 2 days, and that's going to be around. I'm about to sneeze here. Hopefully it doesn't come. That's going to be about 425. That's going to be my level that I want to see hold. I'm sorry. I tried to get the gain down there. Sorry about that. As long as we hold over that 425. Let me get a thing of water here. Hold on. Okay. Then 425, 425, 45, 50, anywhere in that area. Want to hold that. Basically the bottom of this bull flag again. And we have the chance to really push higher. But I want to see that 432 area I was mentioning earlier. We got to take out these highs to really get more constructive. We've got our low. Let's see if we can start to make some daily higher highs now. If we can, that can lead us into the potential of that 435 and then potentially into test that start of the gap. Maybe we only hit the gap and then we roll over. Like I said, we've got, obviously, we're going to go over the dollar and TNX and everything and VIX, but there's still a lot of headwinds, of course, without a doubt. So do bulls have the power to actually bring us into the gap? I don't know, but we'll see. The rally on Friday, really, we were talking on the Wednesday video, you don't want to be a new money short, right? Coming in as we're down in this area. We're watching, of course, some indications that were kind of giving us hints that this kind of snap would potentially happen. And granted, the markets, it wasn't like they had a 2% day. They were up $5. Yes, that's impressive. 1.19%. And unable to close over 430 though, unfortunately. But that wasn't like a rip your face off rally. It was a rally that I think caught the bears off guard. But I've seen SPY go up 2% in a day, 3%. So it wasn't a super strong squeeze, but certainly a short squeeze nevertheless. And that's why we're warning. You don't want to be a short chasing a hole, right? And they got caught off sides, and that's what happens when you do, and boom, they got squeezed. So anyway, can we continue? Again, I think we'll probably consolidate. Let's see if we can at least hold 50%. This is a little bit lower than 50%, but from the price action standpoint, this is really what they need to hold. But ideally for the bulls, they will hold 25% of this daily candle, and that's going to be more or less holding right back in here, holding, I'll just kind of say if we had made that a whole body, anywhere in this area, I could say something like that. Anywhere in this area, ideally you'd want to see hold 25% to 50% of the daily candles range. And in fact, if we can do that, maybe now I don't know what's going to go on with the news and how futures open, but maybe we can start to set up something like this, expecting that volatility compression come in, contraction. We do of course have CPI, which may rocket us or may drop us as well, so it's going to be hard to say exactly what will happen. But as I mentioned, all things being equal, possibly this type of scenario, and then we get our move to the top of the gap. Now, can we get through? Again, that's going to be a question mark, but we will find out this week, certainly. Yeah. All right, so let's look at some other charts here and see what we can take away. Let's come in from a fib perspective. Why don't we do that first and see where we are? Okay, now we rallied up, but where are we here now from the fib perspective? And now this is also, we have our channel here. We're back testing the channel. This is where, right, we broke over, did a fake break right into the 50% retracement, right around that 431.50, and then came back down. Today we basically came back up into that, or excuse me, Friday we came basically right back up to the area. Didn't quite make it. You can see obviously we didn't make a higher high. Yes, we did in comparison, of course, to these candles, but not to where it counts for me. That we'll see. You know, if we had closed up here, I'd be singing a little bit of a different tune. If we closed above the 50% retracement, I would feel a little bit more confident in saying that we'll probably get at least the gap touch. Maybe that gap fell, I don't know, but maybe the gap touch. But let's see what happens. If we start trading and closing back over this 431.50 from this, and certainly back within this trend line, okay, yes, then we can talk about prices potentially coming in to the gap and potentially filling it. Maybe we stop right at the gap and then we hang out, consolidate, and then we make a move. Right, I could see that happening, making another move, hanging out here, consolidating, creating another flag, and then we make it. I don't know. These are all, you know, just speculating, but like to throw out all the scenarios, right? Okay, so, but we may find a sell here again, right at this right at the 50% retracement bearish scenario. We stop right here. We kind of come up. Maybe we do another fake break, right, above. We could also see something like this. Maybe we do a fake break above and we sell back down. Just kind of going over bearish scenarios now. And then we trade back into the retest the breakout area here again in that 425 area that we just went over. It lines up with the fibs very nicely. So, and maybe we catch a bid there. I don't know. We'll see. But that would be a failed breakout. And, you know, but if we close above, as I mentioned, then we can potentially hang out and look for that move. We would want to see at least 1 or 2 day closes at least, you know. But we've all seen a couple of days close above as well and break. So, you know, of course, it's hard to say. But we'll see how the rest of the market and the rest of the big boards and sectors are looking, and what rates and the dollar is doing as well to kind of try to help give us a little bit more clues if this break over it will be sustained or not. Okay, I think that's all I really wanted to go over from this fib perspective. I think on our main daily chart, pretty much the same thing. Found a bid here in the basically 420, came back in. Oh, the other thing I did want to mention, and we could look at it from this chart, you know, if we do, I'm still looking, you know, even if we fill this gap up here, I still am watching that 410 area as an ultimate potential target. So I just want to keep that in mind as well. So maybe, you know, if I was to say loosely, upside target for now would be either start of the gap or complete the gap and then roll over. And that would be where we're heading first. But from there, you know, I'm just going to call a wild card out. Maybe we rally up into here, come back over, bounce. Maybe we make another move like that. Maybe here we hang out for a little bit. Then we make another move. Maybe we come back up. This is my let's see. We'll come back to the video, right, if this happens. There's a bear case for you. But I'll start singing a different song, of course, if the chart tells me to. but we will see. Anyway, from this perspective, same thing, back testing the channel. Let's see if they can hold again that structure here. Ideally, even if this is, now you can see this is about that 50% retracement right here in this liquidity zone. So let's watch for this. So we were kind of talking about that. All things being equal, can we consolidate and flag it up and get back into that, where right here at the bottom of this next liquidity area, basically 435, right? Maybe we stop halfway right here at this midpoint in our next liquidity. Maybe we don't and fill the whole gap. Maybe we come into here. I don't know if then we get supported there. Maybe we do, maybe we don't. Maybe we do this. Okay, enough with the silly projections. Let's see what, hold on, let me see. All right. So, let's see. Oh, of course. Let's look at our big trends here. That'll be the last one I think we'll do. Okay. Let's look at it from the weekly perspective first. All right. So, positive things for the bulls. We did close back inside of our weekly channel with a nice hammer here. Can't ignore the downtrend, of course, that we have presented. Where does that midpoint in the channel? Now, of course, it's descending, so it may change depending on when and if we do trade into it. But from here, it's right around that 435. Now it does start to slope. So 434, 433. Let's keep an eye on this channel. If we do start to trade into it, it's going to be very interesting to see how price reacts. Do we get a rejection, come back down? Do we break over to fill the gap? Or do we trade back up into it and then totally fail back down, come back in here and retest and make the gun for the prior accumulation on that we've been watching in that 410 area? So that is another scenario that we could get, and we could, you know, if you're interested, it could bounce right from here. It could come back, retest the trend line, and bounce from this trend line, and then go for the gap. So, but if we do break and we bounce from here, nice short setup. If we can get a nice back test here of this trend line after it's broken, putting in another lower high. And boom, we look for our target on those 410 puts, right? That would be if we trade up in this scenario. It looks like it would be a back test of about 430, 429, 50, pretty much where we are right now. But let's see. But this is encouraging. This is what they want. So, you know, from this weekly perspective, let's see if we can take out next previous week highs. And then we could potentially get that trend change into there. Let's look at it from a daily perspective. Okay, hanging out. Anything else we could take away? Well, let's do a couple of scenarios. We've already talked about that potential bull flag that we could form if we hang out here, leading us into the trend line. Pretty much lines up with the gap, more or less, right? Pretty close. Not quite there, but almost. So we'll watch that. Maybe if they end up closing us in here. Whoops. Come on. Maybe if they end up, oh, well, that's not acceptable. Maybe if they end up closing us up in here, we can build up some power and then make a move for the gap. So, interesting though. I guess we also should point out that the daily has closed over the 9. So let's keep an eye on that. Sitting at 427.75, basically 427.80. So closed over the 9, 20 down the daily, sitting at 432.36. So we'll keep an eye on that as well. We did close over the daily 200. Actually lines up, daily 200 lining up pretty much with that 425.50 sitting at right now. So that, again, we were already talking, watch that 425, 425.50 area. That'll be interesting. We already saw the confluence with that being the highs of the past two previous inside days on that failed bull flag. So very interesting right there. But nice to see that the daily on the SPY closed above the 200 EMA. I think that's also a bit encouraging for the bulls over the 200 and over the 9, right? Okay, so and you're seeing some of that bullish momentum pick up, right, from our overbought readings, or excuse me, oversold readings that we've been watching. And I think the volume was pretty decent on Friday. Came in above average, and about 141% above the last 30 days in volume, right? We had almost 113 million shares come in, where the average in the last 30 days had been about 80 million. So not bad as far as from the volume perspective. All right, so let's take a look at some other charts, and it's been a long video. Thank you guys for hanging out and navigating these markets with me. Really appreciate it, and I hope it is helping you guys. Oh, you know what? I said in the last video I was going to do some more levels on here, and I did not. I forgot. Let's just take... how far do we have to go back to see when the last time rates were this high? On the Treasury. This is 15 years. Is that possible? Okay. Okay. And where are we at now? 2047. Okay, here we go. Wow. Really had to go back there. Let me turn this on weekly. And I apologize. I should have had this done. So where? Okay, so here we're trading here. All right, let's keep an eye on this area here. I don't even know when this is. 2003? 2007? This looks like the time in the financial. I'm not exactly sure what year this is. But we're at 47.84 now. We've got some areas here at 47 I want to watch out for. So I'm going to watch basically this area between 47 and 49. I think that's what I'll be keeping an eye on as the next potential area where we may trade into. Well, I guess I shouldn't say trade, where we may go into. And let's see what happens if we do get into that area. So that's what I'll be watching there. It's the next kind of major area to see how TNX reacts if we do get into that zone. And we're pretty much in there right now. So very interesting. I'm gonna off camera, I'm gonna do a little bit more digging on when exactly that was that we went all the way back. I can't even zoom out barely. It is in 2004, it looks like. In 2000, I don't know if these are the years, or I think they are. But let's see. We're pretty much in a very interesting spot right now. where we've seen some turns in the in rates here. So keep an eye as we trade into as we're trading into this area, but still nothing really bearish here. Again, a little bit of a topping tail here, which is nice, but we could come all the way back down. We could retrace into and break under 47. That would be nice. That would put pressure off of equities for a little bit, but we can easily trade anywhere into this area and just stay in this upward channel. I mean, let's see if they hold out of this. And in fact, I'm gonna take this off for now because it's not really relevant. But we're gonna want to see if this trend line break holds. If we consolidate in this area, maybe we're setting up in a type of a flag for a push back up into these highs. So let's watch. Let's watch for that. That would be the bearish case. Ideally, I'd like a little bit more of a retracement in the markets, a little cool down here, but we shall see. But nothing really bearish here, right? We are definitely extended. We might just hang out for a while, to be honest. We've had such a move, so could just see some really consolidation in TNX for a bit. Could be about due, right? Like how it did here. So let's see. But holding over 47 basically is still not good. I'm gonna redo some things later on this chart. All right, let's look at the dollar. Now, the old dollar. Okay, pretty much hit. We kind of went over this. We hit our 107.33, came back down. Now, trend line right here. Sure, we're coming in, and what's going on? Same type of situation we were watching earlier on TNX when we were in that channel, and we were talking about this. What really is this in sequence? Well, we had our low, right? I mean, actually, let me do it this way. And I might not be on the right, but we had our impulse move, pullback, impulse move, pullback, impulse move, pullback, impulse move, consolidation, little pullback, inside move, right? Pullback, inside move, pullback. So is there anything really changing here structurally? No, not really. Sure, we could work off this swing high, maybe say that a new trend is starting to prevail, but let's see if we really can't say anything until at very least 106, 105, 85, 80 is broken, right? If this breaks, then maybe we get a little bit of a retest, and then maybe we break down, kind of do a head and shoulders there. Okay, that would be good for bulls, right? That is one scenario, but we have to wait to see if that breaks and we get a retest and then a push down. Even this, still, it would be still bullish on the dollar for me, right? Personally. Because it's just coming back to retest this prior breakout. From here, yeah, maybe we could create another lower high and come down. That might happen. And that we could double bottom there, maybe not, maybe we break right through. But I wouldn't be surprised to see it then just chug back up and break through. So a couple of scenarios there. But this potential head and shoulders, only if they break, come back and retest and come down, could be nice there, a nice little break of the structure. But as long as still that 105, still we're holding this. If we start to come back down into this prior accumulation, that would be a little bit better. But we could accumulate from there and make another move. Maybe it's time that we just trade sideways for a little bit. Another thing to consider. What if the dollar just starts doing this? We'll see. CPI, of course, is going to affect all these things. So, but nothing really too bearish, even though we have sold off a little bit. Let's see. All right, let's take a look at some VIX. Then we'll get into our daily plan for the start of the week. Okay, had a little bit of fake break, tried to get over 20, couldn't get over 20, shot back down, tried to come back up. Let me zoom in. Tried to come back up, retested almost 20. Sold down, obviously, with markets coming down. But as I mentioned on Wednesday's video, we could trade all the way back down into 16 or 1570 area. That's fine. Still bullish for me. Maybe we could start to make a case if we trade kind of similar to the dollar. We could trade down into here, kind of come back up, do this, and maybe make head and shoulders. Okay. That's just obviously just guessing here. That's one thing we could possibly see. If we break the neckline, that's very good for the bulls. But until then, this is all still more or less bullish to me, or for the VIX, that is, bearish for the market. We start trading under. Okay, good for the bulls. Whoops. Good for the bulls. All right, let's take a look at some of our other VIX products that I'd like to look at. So a little bit of volatility coming in the end of the day. We were talking about that potential triple top, and we did see more of that drop in volatility, obviously, on Friday. And we were watching this get a bit weaker. Our 9-day versus the monthly was getting a little bit weaker, showing us that we also may have a little bit of a sell drop in the volatility, giving us a little hint of that potential upside move. And the fact that we were talking when we were looking at the VVIX, right, the volatility of the volatility here, we were watching the 105, 103 level. Couldn't get over, and we saw the downside. So that was really the key there. This is what you want to see, both bears, want to see over 103, 105. Till this gets over that, still bulls have a little bit of hope for them in keeping volatility suppressed for now. And we never got in backwardation here, still in contango on our VIX futures here. So let's see if they start to get at all towards that zero line. But as it stands, still okay. So I think these are positive signs on the VIX, showing us, giving us a little bit of a bull case still for potential upside, at least from this perspective, in my opinion. All right, so last thing I wanted to go over. Let's look at our good old 50-day, how many stocks are trading over their 50-day moving average. We were watching this last time, talking about that potentiality of a snapback. I had mentioned in the video, we could still see, I wasn't saying that we're going to see a move all the way back up, right? A lot of, we may have not had the same macro headwinds going on when we were seeing these readings other times. But I did want to point out to us really the strong reactions that have come in the market, and it's a great contrarian indicators when we get to extremes. You can see, though, what was this low right here in the markets. So how low were we trading? Whoa, we were trading 220, 231.50 or so down here. And if we go up, right, you can see it lining up with that low perfectly. And what did we get coming out of that? A huge extended rally that lasted a long time. What happened here at this low, the 25th, right? Follow it up. Boom. And what did that give us? Well, that gave us a huge rally, right? What do we have here? Same thing. Our low coinciding, gave us a little bit of a rally. And then we came back down, right? And we hit it again right here. You can see this kind of double bottom, triple bottom area right there. And what do we get from there? Boom. Big rally, right? So again, I'm not saying that we're going to get a huge rally like this. Again, different things coming on from a macro perspective, but it is worth taking a look at and keeping in the back of our minds, and something that we use just as a piece of the puzzle as we do our analysis, and try to kind of gauge potential hypothesis. Now, if I had to make a guess about what this potential snapback would look like, I don't know, and I kind of mentioned this, I don't know if we're going to be able to get over the 30. So I would think that this move, and where do we get? For this one, we went from 326, 360, we'll call it, right? And we rallied to 430. Well, that's a pretty decent move, but then we came in and we actually ended up making new lows down in about $10 lower than that. This scenario, whoa, that's not what I wanted. This scenario is what I think is going to happen this time. Now, again, this is just a total guess, but this is what I think it was what we're going to see as a result into this move, where we are now, where we rally for a bit and then we come back in and make new lows. So that would be my guess. What we do from there, obviously, we'll see. We'll have to, there's so many things going on right now. We'll have to see, obviously what rates are doing and the dollar and the Fed, just a different time. So we'll see. But if I had to make a wild guess, this is what I think we're going to end up seeing from this. So would we, maybe we come up into here and then we come back down, or maybe it gets a little bit stronger than that. Maybe we only come up to the 50% line and then maybe we bounce here. I don't know. And then we come back in, and then maybe we make the rocket shot. We'll see. A lot of macro factors have to go in to see, if we get something like that. But I don't think that this bounce is going to, be sustained, So I think that's more the likely scenario. This would be, I would be surprised, but that one could happen. And just kind of double top in that area, right? So we'll see. But very interesting how that lines up, right? And I hope that that helps. All right, so let's go into some daily fibs here and take a look at what we might want to do Monday. Again, watch out for that choppy price action Monday, Tuesday, and then, the market really might be choppy up until Thursday. You had a CPI, so let's be careful. All right, what are we on here? 10 days. Let's bring it to 20. Cool. All right, so we have Wednesday's highs. Let's put everything in context here. Just also like looking at where we are, just compared to a couple of weeks ago. We're basically gunning for that 50% retracement from like 2 weeks. So yes, things are looking better, but still tons of work to do, as I've kind of alluded to, and I try my best to make both cases for the bulls and the bears. Short term, we're going to be leaning a little bit more short-term bullish probably. But let's see. Of course, we got that damn news that just came out this Saturday with the war stuff in the Middle East. So I don't know how futures are going to open. We shall see. But now 425. We already talked about that level. Let's make it about $1, right? You want to see we could pull back to here. As long as we hold still over, now it doesn't mean that we can't take advantage if we start to sell down. We could still take advantage, but from this perspective, as long as we still hold over Thursday's highs, right, over Tuesday's highs, anywhere in this area. So it's going to be that zone again, pretty much that anywhere from 426. 50 to 425, 425.30, anywhere in that area we want to hold. Maybe we can make a case here for Monday's lows. Sure, this kind of zone. So I'll give the bulls the benefit of the doubt for 424.50. It's my last stop for them. if we break under, look for something like this. I wouldn't be surprised. But doesn't mean we can't take advantage of price opportunities to the downside into this area in the meantime. So it doesn't mean that I'll be buying, 428, I'll be buying calls, and I'll be buying calls all the way. That doesn't mean that, right? I could be short and still trade into here and then look to flip long. So there's still those, multiple opportunities, regardless of these kind of, this is in a bigger picture view, but, this kind of, hourly chart view, I don't know, maybe, I don't know exactly what type of view to, medium view, I guess. But let's see if they can hold over this 420, 429.40, we'll call it. Really, you don't want to really see them start to break the 11 o'clock highs, but under 428, I think would be a warning sign, kind of breaking under the Tuesday pre-market highs. We can look for trades back into 426, 425, 424 area. This could be setting up as a fake breakout, right? So maybe we try to push up higher Monday, we kind of hang out, and then we end up breaking, retest, and then come back in, see something like that, and then we end up kind of just trading in a range for a couple of days ahead of CPI. Something like that wouldn't surprise me. So wait though, in my opinion, wait to see if that 429.25, 429 area starts to break. If you want to be safe for 428, I'm going to watch here pretty much the 1 o'clock, pretty much the lunchtime, right? The 12 o'clock lows around 420, 427.75. So, but if we do hang out over, and they don't fade the flag, maybe a little hourly flag setting up, maybe we make that move into the 50% retracement. Potential double top there from last Friday. We could see some sellers coming in at that area if we trade into that. Maybe we bounce here, I don't know. Maybe we break, we shall see. But that's the next area I'll be watching for. And we kind of already went over that 420 to 423 area as well. So don't forget though, the 435 is going to be big as well. The 618, we've already been over that from the daily perspective, and getting over that, that's going to start to push us into that gap. And this is pretty much the gap area up in here. That's going to be the filling the gap. If we're up here, I think the start of the gap was on at 436 or somewhere around there. Let's just take a quick look. Yeah, basically. So getting back, accepting over 435, I think opens us up to at least attempt to get into the gap. Again, we don't know if it's just going to go halfway and peter out, but we shall see. Breaking under the 425, as we said, 424.50, breaking under, look for trades back down into the 423s, 422, and maybe back into this area here. So all right, let's take a look at some balance zones and close out the video. Okay, what do we got? All right, so from this perspective, what do we have? Ooh, look how nicely it stopped right there. Boom. All right. So for me, from this perspective, again, I was talking about the 12 o'clock lows. So we could still trade into there. Ideally, I'd want to be holding up over 429 basically. and holding anywhere up in this general area. Bullish for that flag that we were talking about, right? Trading under there, accepting, looking for moves back into 427.50, 427.60. Kind of last stop there for me on from this perspective on the bull bear case. If we break, we will trade back, or it would be likely that we would trade back into the top of this high here where we ended up squeezing and breaking out. But if we end up breaking under this balance zone at the 425.75, and certainly if we do something like this, if the internals are looking weak, we'll look for that potential bear flag breakdown on some 425 puts, maybe 426 puts right at the money for a little bit more safety, and look for day trades down into the 425s. And I already mentioned here, anywhere in this area, this is kind of that final last stop for me in that 425, 424.40 area. These lows we were talking about earlier from Monday, the Monday lows, and if that breaks, then we'll be looking for trades down into 423, 422. And if we lose that 422.40, watch for trades back in down into the 430, 421s, and potentially into that half gap area here at that 420.75 zone. Bulls want to consolidate and hang out over here, and again, if they start to break over 432, we've already been over that number a bunch. Start sweeping these highs. Okay, then we can look for moves into the 433 area, 433.36, and maybe, just maybe, up into the 435, 75.60 area. You know, I don't know if we're hanging out here. I don't know about that. You could potentially try to short this. Sure, you know, that could potentially work. Hanging out here at 431 puts, 430 puts, if we were hanging out here. But it's for me, still hanging out here could be bullish. But I understand how you could try to fade it, right? Potential multiple tops in this area where we've had issues before. So, but if Apple is strong, if Breath is strong, Microsoft's strong, it's not probably something you'd want to do, in my opinion. But anything could change, right? So that is a thought, you know, looking for something like this again. Again, I don't know. See, all this to me is bullish, so we could just come up and pop up there and come back and break through. But if we break down, again, half gap, maybe we bounce from here, come back down, maybe we find a bid here, come back down, maybe we find a bid like that, you know. Again, I'm expecting that pricey, choppy price action, so I don't know exactly the range that we'll trade in. That's why I really don't like Mondays. So let's see, Monday and Tuesday we'll have a little bit of a better idea of what type of range we are going to get stuck in, if we are going to get stuck in one. You know, I don't know how wide it would be. Maybe it would be even this wide. So something to consider. And we get stuck until CPI. All right, I think that's pretty much everything I wanted to go over. Yeah, I hope this helps. Again, thank you so much to all my subscribers, listeners, followers on Twitter. Really appreciate you guys interacting with me. Hope the content and the videos are helping you navigate these crazy markets. Let's all make sure that we are prepared for this week. Take a little caution with CPI, FOMC minutes. Remember to plan your trades and trade your plan. A prepared trader is a profitable trader. So let's get after it. Let's have a great week. Let's trade smart. And I hope you have a great rest of the weekend. All right, that's it from me. Take care.